What if Iraq announced tomorrow morning that it was allowing the Iraqi dinar to float freely against other currencies? Within minutes, social media would explode. Headlines would spread around the world, investors would begin searching for answers, and millions of people would ask the same question: what happens next? Would the dinar immediately become stronger? Would Iraq suddenly become one of the world's fastest-growing economies? Or would the reality be far more complicated than most people imagine? Today, we're exploring that exact scenario. This is not a prediction, and it's not based on any announcement that such a move is about to happen. Instead, it's a thought experiment designed to answer one important question. If Iraq floated the dinar tomorrow, what would actually happen? And is Iraq even trying to move in that direction? Hello, and welcome to Dinar Intel Hub. Here we break down Iraq's economy, banking system, and financial reforms in a way that's easy to understand. Everything in this video is for discussion and educational purposes only and should not be considered financial advice. When people hear the phrase, floating a currency, many assume it simply means the currency becomes more valuable. But that's not what a floating exchange rate means. A floating currency is one whose value is determined primarily by market forces, buyers and sellers, rather than being maintained at a specific rate by the central bank. That raises an even bigger question. Would Iraq actually benefit from allowing the market to decide the value of the dinar? To answer that, we first need to understand what Iraq has been trying to accomplish over the past several years. If you look beyond the daily headlines, a consistent pattern begins to appear. Iraq has been working to modernize its banking sector, strengthen financial oversight, expand digital payment systems, encourage private sector growth, and increase confidence in its economy. These aren't overnight projects. They are long-term reforms designed to create a more stable financial environment. Why does that matter? Because no country changes the way its currency operates in isolation. A currency reflects the strength of the economy behind it. Investors look at government finances, banking stability, inflation, foreign reserves, trade, and confidence before they look at the exchange rate itself. Imagine trying to build a modern financial system while businesses struggle to move money, banks lack international confidence, or investors hesitate to bring capital into the country. Even if the currency policy changed, those underlying weaknesses could create serious challenges. This is why many economists argue that institutional strength comes before major monetary changes, not the other way around. So instead of asking whether Iraq could float the dinar tomorrow, perhaps the better question is this: has Iraq been building the kind of economy that could support such a decision in the future? The answer isn't simply yes or no. It's much more interesting than that. Because once we examine how Iraq's economy actually works, we'll see why some reforms matter far more than the exchange rate itself, and why understanding those reforms may be the key to understanding Iraq's long-term financial direction. To understand what might happen if Iraq ever allowed the dinar to float, we first need to understand how Iraq's economy is different from many others. Unlike countries with highly diversified economies, Iraq still depends heavily on oil exports for government revenue. Oil has funded much of the country's budget for years, making global energy prices one of the biggest factors influencing Iraq's financial position. When oil prices are strong, government revenues generally improve. When prices fall, budget pressures can increase quickly. This dependence creates an important challenge. A freely floating currency often works best in an economy with broad sources of income, strong private sector activity, and deep financial markets. Iraq has been working toward those goals, but many economists believe that diversification remains one of its biggest long-term priorities. That brings us to another important question. Why has Iraq spent so much time focusing on banking reforms instead of changing its exchange rate? The answer is surprisingly simple. A modern economy needs a modern banking system. Think about everything that happens inside a country's financial system every day. Businesses pay suppliers. Employees receive salaries. Investors move money across borders. Companies apply for loans. Consumers make digital payments. International firms finance large projects. Every one of those activities depends on banks that are efficient, transparent, and trusted. If those systems are weak, economic growth becomes much harder to sustain. Over the past several years, Iraq has introduced reforms aimed at strengthening banking standards, improving financial oversight, expanding electronic payments, and increasing transparency. These efforts are generally viewed as part of a broader strategy to modernize the financial sector and improve confidence among both domestic and international participants. But here's something that often gets overlooked. Modernizing a banking system doesn't automatically mean a currency policy is about to change. Those are two separate issues. A stronger banking system can support economic growth regardless of whether a country maintains a managed exchange rate or eventually chooses a different monetary framework. This distinction is important because discussions about the Iraqi dinar sometimes treat every banking reform as if it directly signals an imminent currency event. In reality, reforms can have value on their own by making the economy more efficient and attractive to investment. Now let's return to our original scenario. Suppose Iraq announced tomorrow that the dinar would begin floating freely. What would financial markets likely do? The first reaction would almost certainly be uncertainty. Investors, businesses, and financial institutions would all try to determine how the market would value the currency. Some participants might buy the dinar if they believed Iraq's economic outlook was improving. Others might wait for more clarity before making major decisions. The result wouldn't necessarily be an immediate surge or collapse. Much would depend on market confidence, economic fundamentals, central bank credibility, and how the policy was introduced. And that leads to perhaps the most important question of all. If confidence is such a critical factor, what exactly builds confidence in a country's currency? The answer has far less to do with one announcement than many people think. It depends on whether investors believe the economy behind that currency is stable, resilient, and capable of supporting long-term growth. That's where Iraq's broader economic strategy becomes far more important than any single headline. This brings us back to the question we asked at the very beginning. What if Iraq floated the dinar tomorrow? The honest answer is that no one can say with certainty what the market's immediate reaction would be. Currency markets respond to a wide range of factors, including investor confidence, government policy, foreign reserves, inflation, trade, and global economic conditions. A floating exchange rate is not a magic switch that instantly transforms an economy. Instead, it reflects how the market views the country's overall financial strength. That's why many economists spend far more time analyzing economic fundamentals than trying to predict a single monetary decision. When we step back and look at Iraq today, one thing becomes clear. The country has been working on a much broader agenda than simply managing its currency. Banking modernization, digital payment systems, financial transparency, private sector development, infrastructure investment, and efforts to diversify the economy all point toward a larger objective: building a stronger and more resilient financial system. Whether those reforms eventually lead to changes in exchange rate policy is impossible to know. Any future decision would depend on economic conditions at that time, as well as the priorities of Iraq's policymakers. That is why it's important to separate confirmed developments from speculation. Confirmed developments include ongoing banking reforms, modernization efforts, and initiatives designed to strengthen Iraq's financial institutions. Those are measurable actions that can be observed through official announcements and policy changes. Speculation begins when people assume those developments guarantee a particular outcome for the currency. While reforms may create a stronger economic foundation, they do not automatically predict when or how future monetary decisions will be made. For investors and anyone interested in Iraq's future, this distinction matters. Instead of asking, "Is one announcement about to change everything?" a more useful question might be, "Is Iraq steadily building an economy capable of supporting greater financial integration over the long term?" That question shifts the focus away from short-term excitement and toward the bigger picture. As Iraq continues developing its banking sector, expanding its private economy, attracting investment, and improving financial governance, each step becomes another piece of a much larger puzzle. Some of those changes may seem small when viewed individually, but together, They reveal the direction the country is trying to move. So if Iraq floated the dinar tomorrow, the outcome wouldn't depend on the announcement alone. It would depend on everything that came before it: the strength of its institutions, the confidence of investors, the resilience of its economy, and the credibility of its financial system. Perhaps that's the biggest lesson from today's discussion. The real story isn't just about the dinar. It's about the foundation supporting it. And that's why, here on Dinar Intel Hub, we'll continue looking beyond the headlines to explore the economic reforms, banking developments, and long-term strategies shaping Iraq's future. If you enjoyed this type of analysis, let me know in the comments what scenario you'd like us to explore next. Would you like to see what might happen if Iraq dramatically reduced its dependence on oil, or how Iraq's economy could evolve over the next decade? Subscribe if you haven't already, and join us in the next video as we continue connecting the dots behind one of the world's most closely watched economies.